warm welcome to the program. Thank you for joining us on this edition of K24 Inside Business, the last word in business. My name is Sarah Adam. Later in the hour, we'll have a discussion that will focus on technology in workplaces and how it has disrupted business model. We'll have that discussion later in the hour, but for now, let's take a look at what is making headlines in the world of business. Freight services on the Nairobi to Naivasha standard gauge railway has officially been launched. Dairy farmers in Nyandarua County have reported a drop in milk production. And high rate of urbanization puts pressure on access to basic shelter. Now to a top business story of the hour. Now the Naivasha Railway, standard gauge railway, has officially been commissioned by President Uhuru Kenyatta, and we have our reporter who is on standby, Mercy Milanoi, who is going to give us the status update of this and exactly what it will mean for the cargo business. Good afternoon, Milanoi. And what implication will this particular cargo freight mean for businesses?
Well, thank you, Sarah. A few minutes ago, we saw President Uhuru Kenyatta flagging off the first freight train that will be heading to the Naivasha Inland Container Depot. Now, this is quite interesting because over the time we have seen cargo transporters, especially in the Transport and Logistics Center, staging demonstrations as far as the transportation of cargo is concerned by SGR. But it seems like the government is not looking back as far as this move is concerned, as now the first freight train has officially taken off from the Nairobi terminus that will be heading all the way to the Naivasha Internal Container Depot. Now, what this means is that for all cargo that is destined for the upcountry and also to other East African countries, will now be cleared at the Naivasha ICD. Now, basically, now this means is that you don't have to, people who are the importers won't have to clear their cargo from Mombasa or Nairobi. They'll simply wait for it at the Naivasha ICD. There are two ways to look at this. Number one, it is a win for the government and also for the importers because, number one, this will increase the amount of cargo being transported by SGR. And, of course, this adds to the SGR revenues. At the same time, for importers, it is expected to be convenient because, as of now, it takes more than 10 or even 12 hours for cargo to be transported from Mombasa, even simply to Naivasha. But now this particular duration has been shortened to about 8 hours. So for importers, it is a win. What now needs to be done, especially now for the cargo transporters and logistics business owners, is now to reposition themselves to enable them, to ensure that now they bank on the last mile transport. Because at the end of the day, the train does not move to the doorstep. But now I think for cargo transporters, now it's simply now to start banking on the last mile transportation. Now, some few facts about the freight service is that it has a capacity of 4,000 tons, that's about 216 TEUs. The line capacity, it has a line capacity of 22 million ton per annum. That's quite a lot. And of course, the time taken will be 8 hours. And per single wagon, it will be carrying 108 TEUs. And of course, the cargo clearance will be 24/7 at the Naivasha ECD. And there'll be available 56 locomotives. There'll be 1,620 wagons. And of course, this is expected to, to ensure that to increase the amount of cargo being transported from Mombasa all the way to Naivasha. Now, speaking of the Naivasha port, it is 90% complete, and of course, we'll be seeing President Uhuru Kenyatta later on. I'm going to commission the port once it is fully complete. There are other supporting infrastructures that are at the port that are being built around the port that are expected to ensure that from importers to cargo transporters and other stakeholders are able to have every service that they need. Now, a few facts about the Naivasha depot is that there'll be 2 pairs of trains that will be heading operating there. And of course, the Naivasha depot has a capacity of to handle 120,000 TEUs per year. And upon completion, it will be able to handle more than 300,000 TEUs per year. And of course, President Uhuru Kenyatta was saying that, first, this will reduce the distance covered and, of course, even the time covered for cargo transportation, keeping in mind that Kenya is really placing itself as a logistics hub. As you've seen, Sarah, there are a lot of infrastructure developments that have been going around the port, and also other infrastructure such as the rail, the launch of the Nairobi-Suswa rail, and other road transportation networks. Now, the launch of the port of Lamu also is expected to boost these services, and it will mean that initially there was a lot of transshipment happening before cargo arrives finally in Kenya. But once the port of Lamu is launched, the Panamax ships will be able to be docking at the port of Lamu, which means more cargo more cargo to be transported. And even as we gear on towards the launch of these particular ports, the port of Lamu, Terminal 2 in Mombasa, and also the port of Kisumu, basically this infrastructure such as the Naivasha port is expected to help in clearance of this cargo and reduce the amount of cargo that is at the port of Mombasa and also the Nairobi ICD. So basically, it's all about improving the logistics business in Kenya, and also ensuring that cargo is moved effectively and businesses are able to receive their cargo at a good time, and also the time is shortened as far as cargo transportation is concerned. Also, the president was saying that this also will help probably reduce road accidents, as this will reduce the amount of lorries on the roads. Earlier on, we checked the statistics with the KRA Customs. We find there are about 27 trains plying the Nairobi-Mombasa route per hour. And of course, for businesses, Sarah, it's simply, redefining and going back to the drawing table to see how they can still leverage in the cargo business without necessarily depending on the traditional way that has been of doing business, that is carrying cargo from Mombasa to other parts of the country, which won't be the same with this freight service. Back to you, Sarah.
Thank you very much, Mercy Milano. She'll be giving us an update on this later in our subsequent bulletin and being able to tell us how this will transform the nation and how we'll be able to have a competitive edge against Uganda and Tanzania. Now, moving on from that, Kenya will need almost a decade to tame runaway debt, as a country is expected to borrow $9 trillion by 2024. Rating agency Finch says general government debt to GDP ratio will continue increasing through 2022 to 64.8% before easing gradually to 60.5% by 2028. In November 2019, the parliament approved a change to the existing debt limiting, moving it to a nominal limit of $9 trillion from 50% of GDP in net present value terms. The rating firm warned that Kenya spent twice as much as its peers, paying for loans with the government's interest cost at 22.1%. Now, moving on, China has assured Kenyans of its support during election for a non-parliament seat on the United Nations Security Council scheduled for June next year. Speaking when he paid a courtesy call on President Uhuru Kenyatta at State House, Chinese President Xi Jinping Special Envoy Wang Yong said China believes that Kenya is better placed to voice Africa's interest at the council. Caroline Jenga brings us that story.
Special envoy in the country to attend today's launch of the standard gauge railway freight service from Nairobi to Naivasha Inland Container Depot congratulated Kenya following its endorsement by the African Union to vie for the UN Security Council non-permanent seat. Wang Yong says they support the reforms of the UN Security Council and believe that Kenya will help to increase the voice of African countries at the Security Council. During the meeting, which was also attended by Head of Public Service Service Joseph Kenyo and Cabinet Secretaries Monica Juma, Ukur Yatani, James Macharia and Fred Matiang'i. President Kenyatta also discussed the enhanced bilateral relations between the two countries. On trade, President Kenyatta and Wang agreed on the need for the two nations to explore more areas of cooperation and deepen private sector engagement. Wang said China is working on an arrangement that will see more of Kenya's export get into the expansive Chinese market. He cited the lowering of taxes on frozen avocados from Kenya from 30 to 7%, saying that is one way of ensuring Kenya's products have increased access to the Chinese market. Wang also assured President Kenyatta that China is keen on encouraging more of its people to visit Kenya as tourists in a bid to grow the people-to-people interaction between the two countries. President Kenyatta commended the partnership between Kenya and China, especially on infrastructure development, saying the infrastructure projects are geared towards stimulating the country's economic growth. The president and the visiting Chinese special envoy also discussed cooperation between the two nations on security, education, science, and technology. Caroline Jenga for Inside Business.
Thank you very much, Caroline Jenga, for that report. Now let's cross over to Mombasa, where the KPA boss, that's MD Daniel Manduku, has filed a ruling or application to stop his arrest and prosecution over corruption allegation. Let's listen in.
For us to try and attempt to educate them on the contours of their operation. And my lord, it is so sad for a country, young as Kenya is, to have members of parliament who are supposed to give effect to the law that we have put in place, working against the achievement of what the Kenyan people aspire to achieve. I urge you, my lord, to find that Senator Orengo is absolutely conflicted. He has no business continuing appearing for the petitioner in this matter or any other matter at all. And all his colleagues sitting in parliament today must elect. This country has many opportunities. One does not have to be a member of parliament and council at the same time. They can elect to be one. I rest my submissions. Sorry, my lord, before Lana Senior submits, my colleague is supporting my application, Ms. Sanguya, for the Attorney General.
Your Worship, I support the application by the Lana Senior Secretary. It's a joint application by the Attorney General and the DPP. And I specifically argue that the Learned Senior Counsel is conflicted in the role that he has taken in the representation of the petitioner. Most obliged.
My Lord, I think counsel owes it to the court when making an application, particularly when it's an ambush, to make a full disclosure. My Lord, there's already a bill published to deal with issues of conflict of interest. Because of the nature of the law as it stands and how the courts have interpreted those laws, the objective of this application by Mr. Muteti cannot be met. And the publication of this bill arises because the DPP, Director of Public Prosecutions, the Attorney General, and other parties have brought the same issue before the High Court, and the High Court has made decisions on this matter. My Lord, in the election petition number 3 of 2013, Busia High Court.
We'll be bringing you a comprehensive update tonight on K24 Business. Be sure to tune in for that and more stories making headlines in business. But for now, we promise that we will be discussing technology and how it has disrupted businesses. Now, banks, insurance, and microfinance companies have been urged to integrate technology in their operation to increase efficiency in service delivery. According to banking experts, integration in new technologies is important, especially when it comes to financing, delivery, and customer data protection, and it reduces incidents of cybercrime, as well as reduce transaction costs, making banking more affordable and accessible to many Kenyans. Joining us to speak about technology at large is the CEO of CompuLinks, who is Salish Savani. Good afternoon.
Good afternoon.
And thank you very much for joining us this afternoon.
Thank you for having me.
Now, how can technology be able to help, especially when we have issues of cybersecurity cropping up? How will this be able to, like in the long term, many people are using technology. How will this be able to be stopped, especially when it comes to even regulations?
So if you see the incidences of theft related to financial transactions, there's a lot of incidences where identity theft is becoming a big problem. So I take your password or I take your PIN, use your card, and start transacting with your card. And this can be stopped using better, simpler technology like biometrics. So a lot of banks in the country are already implementing that, and we are helping the banks like Equity Bank, KCB, Family Bank are already implementing that to enable biometric KYC, the Know Your Customer, the eKYC process, which makes sure that every customer of the bank is identified using biometrics. So if I want to do any transaction, I must put my finger to authenticate the transaction or have a face in front of my phone. So face recognition, it could be voice. So there are various modes of biometrics that we are implementing for banks, and that can really help in curbing some of the frauds that are happening. Okay,
speaking of fraud, when anybody, we've had incidents of citizens complaining that whether they bank, whichever bank that they bank with, they normally have fraud incidents, especially when it comes to online, where a person just needs the security code and their number, and that's it. They're able to transact even 25,000, 50,000, whatever amount. Right. When you go to the bank to talk about this, they say they have no way to stop it because Visa has allowed this. Right. So going forward, how will consumers be protected when we have international companies authenticating such fraud? What happens?
Right. So what the banks are doing right now, most of the banks have actually implemented the OTP, the one-time password, as a second factor authentication. And what we are doing with the banks is bringing in a third factor authentication, which is either a face. So for example, if I want to do a transaction using somebody's card, my face has already been recorded in the bank's system. So I must be able to show my face on my phone to authenticate that, yes, I am the one who's doing this transaction. So that will really, so regardless of whether the transaction is hitting the international schemes like Visa or Master or UPI, the transaction will still come to the local bank, and the local bank has to say, yes, I know this customer and I am authorizing this transaction. So with this biometric authentication, that is going to absolutely reduce the risk of such frauds.
Okay, and when we talk about regulation, what regulation or policies that need to be put in place to ensure that customer experience is actually good, and at the same time you protect customers' private identity, especially when it comes to even transaction and being able to know that their money is actually safe?
So the central banks in East Africa are already discussing this to bring about biometric as a requirement for KYC for banks. Uganda has moved forward already. They've already put this regulation in place. Kenya is yet to put the regulation in place, but the Kenyan banks are very proactive, and they're already putting the systems in place to be ready for the regulation. But they're really saying we want to protect our customers and make sure that our customers' money is safe with us, and that's why they're putting these measures in place. So it's just a matter of time for the regulator to come in and say, yes, this is going to be a mandatory requirement.
All right, and let's cross over, for instance, to e-commerce. We are seeing e-commerce platform coming into the country, even the international ones, but at the same time, they are currently not doing so well in this particular sector. What adjustments probably can they work on to ensure that e-commerce peaks in the country?
I think there are several factors. One is delivery is still a challenge in our country to deliver goods to our customers, because we do not have a national addressing system completely rolled out. We don't have street numbers everywhere. We don't have locations very well mapped out, but that is improving. So one big part of e-commerce is really delivery, and two is getting the product available on time. So, and the third is, of course, giving the customer an omni-channel experience. I must, as a customer, have the same experience if I go into any store or I go into the online site of that store. I must have the same experience of being able to shop with the same experience as if I'm in the shop with ease. So it's a matter of time where most of the retailers in the country will gear up to that. And also the national addressing system, once it's in place, that'll really help. Google Maps is already helping with having the country mapped out pretty well, but there are a lot of areas which are still not so well mapped out. So it's a matter of time. So one is the customer today is pretty savvy to really do online shopping, but there are some of those hindrances which it's a matter of time, and we are already doing that with some of our customers, where we've created e-commerce platforms, and our customers, for example, Gilani Supermarket in Nakuru is already online with their store, and they're experiencing a good amount of traffic.
All right, just before we wind up, you've recently rebranded, 25 years in your operation. What has been your challenge and your success moments in this rebranding?
So 25 years is a long time. Only 4% of the companies in the world make it to 25 years. So we are fortunate that we've come this far, and we're looking forward to another 25 and more. Our key challenges have been, getting the right manpower for the technology part of the business, and that is improving. I must say it's improving, but there is still a gap between what the industry wants and what the academia is churning out. So we spend a lot of time actually training people before they're actually productive in the business. So, and then getting experienced people is not easy, right? And then we compete with the big boys in terms of attracting talent. Right. So that is one challenge. The second challenge is access to easy finance. That's not been easy. And third, of course, is generally access to government business. So we are not able to access government business. Most of the government business actually goes to a lot of foreign companies. And we are hoping that government will recognize companies like us who are doing a lot of work, creating a lot of employment opportunities, right, and paying a lot of taxes. So we are hoping that that will change and we'll get access to more government business.
All right, thank you very much. We've been speaking to Sailesh Savani, CEO of Compilance, and he's been able to talk about technology, telling us what exactly is in this particular space and how you can tap in this business. Now, moving on from that, squatters living at the disputed East African Portland Cement Company land at the river are calling for an alternative dispute resolution as recommended by the Ministry of Land and Physical Planning Task Force Committee. The task force report admits the presence of squatters in the expansive 12,000-acre piece of land, recommending that they be probed to identify genuine squatters and exploit alternative dispute resolution to avert any land dispute, a matter that squatters say has not yet been implemented.
A tussle between the local community and East African Portland Company over the ownership of land at Athi River, Machakos County is far from over. Speaking during the annual prayer general meeting held in Athi River, devastated squatters say that they have been forcefully evicted from the land, contrary to what the task force committee formulated to solve the matter settled upon, which was to first identify an alternative land for the squatters before they are evicted. They also claim to be frustrated over the slow process as pending court cases remain unsolved.
Tungeomba serikali iharakishe hiyo stakeholders meeting tuweze kumalizana na hii maneno, community tukae vizuri bila matishio ambayo ingine tunapata ya kwamba kuna shida zinaweza zikatokea.
However, EAPCC, who owns the land, has never taken responsibility of evicting the squatters. The squatters have also written to the President and EAPCC to be considered to purchase the land from their society's savings that date back to 2010.
Watume watu wakuje ground. Kuna watu wanaongelelea kule kando na serikali haijui. Wakuje ground wajionee kwa macho. Wale wananchi wamekaa hapa, wamejenga, tuko na mashule, tuko na makanisa, tuko na misikiti. Watulilie to settle.
The land has in the past been utilized for mining cement materials before it was exhausted. EAPCC has also recommended intentions to sell the part of the land to raise 45 billion shillings to revamp the ailing company. Linda Koskei, K24, Inside Business.
Now it's time to take a look at how the shares are performing at the Nairobi Securities Exchange. We want to see the biggest gainers and losers of the day. And also, we'll be taking you through the stocks. Now, top gainers of the day, we have Uchumi, which has a price share of 38 cents, and the percentage change is at 8.57%. Then we have Standard, which has a price share of 26 shillings and 50 cents, and the percentage change has gone up by 6%. Then we have Sasini, which has a price share of 17 shillings, and the percentage change is at 5.26%. Those are the top gainers of the day. Now, the top losers, we have Everready, which has a price share of 1 shillings and 08 cents, and the percentage change is at negative 10%. Then we have BOC, which has a price share of 58 and 50 cents, and the percentage change is at negative 7.14%. Then we have TPS Eastern, which has a price share of 16 shillings, and the percentage change is at negative 5.88%. Those are the top gainers and losers for the day. Now we want to see how the shares are performing at the Nairobi Securities. We want to see how the shares, we've seen how the shares are performing at the Nairobi Securities Exchange, and now we want to take a look at how the currency is performing against other major currencies. Now we have the dollar, which is rallying at 101 and 52 shillings, buying and selling at 101 and 72 shillings. And then we have the sterling pound, which is buying at 135 shillings and 47 cents and selling at 135 shillings and 76 cents. And you have the euro, which is buying at 113 and 12 cents and selling at 113 and 37 cents. And we have the rand, which is buying at 7 shillings and 01 cents and selling at 7 shillings and 03 cents. Then we have the Tanzanian shilling, which is buying at 22 shillings and 54 cents and selling at 22 shillings and 68 cents. And then we have the Ugandan shillings, which is buying at 36 shillings and 04 cents, buying and selling at 36 shillings and 21 cents. And that is how our Forex is looking like for today. We've been able to take you through the biggest gainers and losers for the day, and you can know where your money is at. And that is how we wrap up Inside Business, the last word in business. My name is Sarah Adam. Up next is Newscut.